This is Gurpreet Singh Buttar, real estate portfolio and investment expert. On this show, we will explore exciting opportunities in the world of real estate. Joining me today, Mr. Shadi Mukhaibar, Chief Operating Officer, PRG Mutual Fund Trust, who will share valuable insights about how to invest in real estate through registered funds. Welcome, Mr. Shadi, on the Real Power Nap.
Thank you for having me here today with you.
So, Mr. Shadi, can you explain how mutual fund trust works and how individuals can invest through TFSA RRSP and or through other registered funds?
Mutual fund trust is basically just a regulated investment trust that's set up and governed by the Canadian securities regulators, along with the Ontario Securities Commission. In our case, we're developing real estate in Ontario. But the mutual fund trust just allows us to use those registered funds from investors to be put into our projects. So a very simple, seamless transaction. And nothing really more than that. It just allows us once again to be able to actually work with investors that have those type of registered funds that they want to deploy into real estate opportunities, real estate projects, etc.
Can you give us a quick background on PRG Mutual Fund Trust and its core mission?
So PRG Mutual Fund Trust was set up and started by the founder, Harsh Pabla, who had the vision of taking his expertise in real estate and taking it beyond that.
Okay.
Going out and being able to acquire real estate, to be able to actively develop that real estate and bring an investment group around us, around him, to basically invest into those projects to help build wealth. Okay? So our core mission is around helping Canadians, individuals, look for alternatives in what they may be used to doing today as far as investing goes. And our projects is really where we think there is the value add for many investors, and opening that up so that they can actually look at these types of projects and invest beyond what they're capable of doing today.
If someone doesn't have cash, but he has money sitting in TFSA or RRSP, then they can deploy that money in real estate.
Absolutely.
And earn a good return.
And earn a good return. Absolutely. So yes, so because we're a mutual fund trust and we're regulated by the Canadian securities regulators, yes, the investments that people can invest into projects can be registered funds. And typically, these investments will give the investor a higher rate of return than the average investment that is actually out there in the market, whether it's stocks, other real estate transactions, etc.
What about the safeguards are in place in terms of investors' risk?
The safeguards that are in place for us is around the way we put these investments out to the market.
Okay.
So for example, if we are talking our PRG Commercial Center project, there's safeguard around how the property is site plan approved. There's safeguards around the amount of money we bring in from the investors. There's safeguards around how we bring money in from investors just under regulatory requirements. And beyond that, it's about strategy and strategic things that we do with the development that helps secure and safeguard the investment itself.
Can you tell us about leadership team in PRG Trust?
Sure. So leadership team consists of mainly two of us. Harsh Pabla, who's the CEO and president of PRG Group and PRG Mutual Fund Trust.
Okay.
And then myself, who's the chief operating officer of PRG Mutual Fund Trust. Combined history, we're talking over 43 years of development, construction, financing experience that we bring to the table for the projects that we bring to our investors and the things that we will do over the next 10 to 15 years.
Why do you think investors feel confident in the PRG Mutual Trust management?
So I think one of the things that people should, or investors or individuals should feel confident in the leadership team at PRG is based on our history.
Okay.
Mainly. So, Harsh Pabla has a 20-year plus history in real estate development, acquisitions, construction, financing management, along with the real estate in general.
Okay.
Basically, my background is all finance. I've been in the finance industry for over 23 years.
Okay.
And I financed a lot of these construction projects, a lot of these build-outs, a lot of these investment projects. And I think just the combination of our experience combined is really where the value is for an investor to really trust and see what we are doing based on projects that we've completed and done in the past that have been successful for investors.
So, PRG Mutual Trust bringing PRG Commercial Plaza in Brampton.
Yes.
So, can you share details about that?
Absolutely. So the PRG Commercial Center project that we are talking about is phase 2 of a larger development on that site located at 9300 Goreway.
Okay.
Okay. So the vision of PRG Commercial Plaza is just bringing another viable commercial plaza to the city of Brampton.
Okay.
Okay. And the vision is to, if you look around Brampton, there's a lot of commercial real estate developments, but we believe that our development is very unique to its environment, strategically located in a specific corridor of Brampton, and just the aesthetics and the feel of the building when we do bring it to market will be a lot different than most of the developments that are out there.
How much capital is required for this kind of development? Like if someone wants to develop a plaza, like similar plaza like this, what do you think? How much he should have in his pocket? How much he can raise from market, or how much he can get the loan?
There's a number of moving parts in that question. Project of that size is typically around a 40 million, 45 million construction budget, which includes the land acquisition and all the construction that goes into it, hard costs, soft costs, marketing costs, sales costs, etc., with an exit that will be well above 55 million in sale. So when we look at the project itself, when we sell each individual unit or units combined, we should exceed well over 55 million in sales, potentially over 75 million in sales.
Is this a single phase project, or it's a part of larger development strategy?
So this is part of a larger development strategy. To be honest with you, this journey started in 2017.
Okay.
So in 2017, the 10.1 acre parcel of land was purchased.
Okay.
And then through the development process, we have subdivided that land into 3 parcels.
Okay.
The first phase of that development is Castlemore Town Center, which is the project that was completed in 2023 and provided great returns for those investors that were part of that initial phase 1 and that initial project. The second phase is the PRG Commercial Center project, and then that's on our south side parcel. And then our north parcel, we have 3 more phases. So it'll be phase 3, 4, and 5. Phase 3 will be a purpose-built rental. Okay. We are going to work with investors to have an equity ownership stake in a purpose-built rental being put up. And then stage 4 and 5, which will come in, around 2030, let's say, will be 2 apartment buildings for sale condos. So that's a 5-phase development.
5-phase development.
On that project that started in 2017.
And we are in phase 2 now.
We are in phase 2.
3 more phases are coming.
Yes. Yes.
What stage is the project currently at? Land acquisition, approvals, or construction?
Right. So the stage that we're at, so we started raising capital for this project, the PRG Commercial Center project, I would say around January, February.
Okay.
It typically takes us 6 to 9 months to raise capital for any project.
Okay.
We are in the final stages of that capital raise.
Okay.
By the end of this month, by October 31st, we will close down the raise for that project. Okay. And then we go and we are actually in phase 2 of that, which is basically finalizing the addition to the project itself, so adding the 3rd floor, and then putting together all the sales material so that we are ready to start selling the units to the public if we go to that stage of selling. Most of the units in this project already have been sold, so we're about 50 to 60% pre-sold with the condo units there. And the next phase thereafter will be construction phase. So once we wrap up the sales phase, which should be, I would say, by the end of the year and or within the first 2-3 months of the beginning of the year, we'll start the 3rd part of that, which will be the construction. So we anticipate constructing in between January and April of 2026. It'll take us 12 months to complete the project. So we would finish building the project in April to May of 2027. And then from there, we start working on handing over the individual units to the people or the individuals that had bought those units. Okay. So whether it's the investors, whether it's business owners, etc., the whole entire project has a 2.5 to 3 year timeline. So we anticipate that we will be done by mid of 2027, latest end of 2027, but that's the 2.5 year to 3 year timeline.
Total project timeline was 3 years. We already passed 8-9 months, so 2.5 months is left next.
Exactly. So we have probably about 2 years and a few months left to complete the whole entire cycle of the project.
How do you see this commercial center impacting in Brampton's economy?
That's a tough question, but I would answer it this way. I would say that any time any builder developer comes into a market whereby there's a growing population like Brampton, when you build these types of projects, there's always an add value to the community itself because you're doing a couple different things here. We are just talking about the commercial plaza, which brings in a lot of businesses, right? So for a community to bring in businesses into these markets, that's a very big bonus and benefit to Brampton and the area that the plaza is being built. The addition of that, there are other things that are happening that will add to that, which will be our apartment buildings. So not only will we bring in more traffic, more residents to that area, we'll also bring businesses that people want to have in that area, from doctors to pharmacies to, medical stuff, non-medical stuff, restaurants, all sorts of different types of businesses. But that's where the biggest impact will be, is that it's gonna create a business hub, a business environment to bring more of that type of stuff into Brampton itself.
If we talk about investors, what kind of investors can invest in this? All Canadians can invest, or it is just limited to certain high net worth individuals?
So investing into exempt market offerings, which is what we are, meaning that this project, what we do is not on the public stock market. Okay. These are private equity placements. Yes, there is a certain range of investors that would be able to invest into these. One would be an accredited investor. An accredited investor just means that typically they have income, if it's a family or an individual, typically they have income over $200,000 to $300,000 a year, and they have a substantial net worth, which means that they just have the ability to invest, not unlimited amounts of capital into projects like this, but they have a higher probability of being able to invest into these types of projects, okay? Because they are considered somewhat sophisticated investments, okay? Now, there are other types of investors, like eligible investors, that can invest into these projects as well. And typically that bar and that threshold is way lower. So that type of an investor, an eligible investor, would have to meet the criteria of earning between $75,000 and $125,000 a year, combined individually or with their spouse, and would have a net worth in the range of around $400,000, okay? But typically, the investors that like to invest into this stuff are individuals who like real estate, individuals who don't want to manage or actively manage real estate, individuals who want to take their registered funds and invest it into something different than a stock market or the typical investments that they would invest into.
What is the minimum amount of investment someone can invest in it?
So our minimal investment for the PRG Commercial Center project specifically is $25,000.
Okay.
And then all our other projects will be different based on when we bring those projects to the market. Okay. But the PRG Commercial Center project specifically, $25,000 is the minimal investment.
As you said that, we can invest through TFSA also.
Yes.
If someone has 10,000 sitting in his TFSA, can he invest that, or he should have to have 25,000?
So I would say that if the minimal investment is $25,000, it can be a combination of investments. It could be a TFSA of $10,000 and RRSP of $15,000, or vice versa. Okay. But the minimal investment, regardless of it's a registered fund or non-registered fund, so if it's cash, is going to be $25,000 combined.
Can it be in this way? If two investors can join together, come together, each of them can invest, one can invest 10,000, one has capability to invest in 15,000. So can they combine together as a one?
Yeah, so that's unfortunately not. And that's because it's a regulated investment, which means that each investment is individualized. In other words, the individual can invest by themselves, and each individual has to invest by themselves. And they have to meet that criteria by themselves as an individual. Okay. Whether you're married or not, if you have a spouse, same thing. If you're a spouse, same thing. It'd be two separate investments. Okay. Now, would we make an exception for a family to invest combined the amount of $25,000? Yes. Okay. But the other way to invest through a group or a partnership could be through a corporation. Because we do accept investments from corporations as well. And in a corporation, as long as the investment is $25,000 at minimum, then there could be multiple investors out of a corporation potentially that could invest in these projects.
What kind of returns investors can expect, and in what timeline?
So once again, if we're talking just PRG Commercial Center project, then I will give you that answer. In a whole, all of our projects will have different investment returns as we bring them to market. But as far as the PRG Commercial Center project goes, the annual return that we are looking to provide to the investors is on the low end of 25% per year.
Okay. So somewhere they can expect minimum 20 to 25% return.
Yes. Yes.
How does PRG balance risk and reward for investors?
So for an investor, when you look at investing into these types of projects, really it's one, the developer, the background, the team, the background, right? So
Yeah.
that's risk one.
Yeah.
You have to be comfortable with that. You have to be comfortable with trusting the background of these individuals that are doing these investments.
Yeah.
Okay. Two, it's about the investment specifically. And what I mean by that is that, for example, the PRG Commercial Center project, the land that is sitting on, the 2.61 acres of land that is sitting on, is free and clear.
Okay.
Okay, which means there's no debt on that land, which is another added protection to the investors.
Okay.
Okay. The third part of that would be that we are a regulated investment trust, which protects the investor as well, because we have to comply with the Ontario Securities Regulators, the Canadian Securities Regulators, and the Ontario Securities Commission when it comes to how we market these investments, what we say we will do with this investment, the profits that we will make out of this investment, and just the way we work with investors. Okay. Lastly, I will say this is that land right now is sitting under a trust.
Okay.
Okay. And going back to what I had mentioned before is that we do investments on an equity basis, which means the investors come in and they own an equity stake of that land.
Okay.
So our investors actually own that land with us, and that's the biggest protection upside for them, is that the land is owned by us and the investors.
Oh.
Okay. And then what we will do, the PRG team will develop it for ourselves and the investors to get it to market, get it sold, and give the investors back a return.
How investors can use their registered funds like TFSA RRSP to invest in this project, and what is the whole process?
Because we are an investment trust and we're regulated by the Ontario Securities Commission, we have the ability to take in registered funds from investors.
Okay.
That is the key there.
Okay.
If we were not an investment trust or not a mutual fund trust, then we wouldn't have the ability to do so. Okay. So the process for us is that we work with a third party exempt market dealer who basically processes the investment for the investors who are interested in investing into our project. And from there, when we move the money, or when the clients move the money, or the investors move the money from their banks to Olympia Trust, Olympia Trust is set up to handle those registered funds on our behalf and on the behalf of many mutual fund trusts. Okay. It's a very seamless transaction between the financial institution or the investment fund or investment that it may be coming from, as it's moved over to Olympia Trust.
So you mean they need to open a TFSA or RRSP account with Olympia Trust,
So
or they can just move money?
Yeah, so they could, two things. One, most investors already have these TFSAs and RRSPs set up in their own bank accounts or investment advisors or financial institutions.
Yeah.
When we talk about Olympia Trust is like a gatekeeper, I would say.
Okay.
Yes, you would, as an investor, have to set up an account with them, whether it's a TFSA, RRSP, LIRA, etc. But you're just setting that up so that you can actually transfer your funds from your investment company or bank over to Olympia Trust, so that the money is kept in the same form that it is in.
Okay.
Okay. So if you're moving RRSP, let's say from a bank to Olympia Trust's job is to ensure that it's transferred over and remains as an RRSP, so that CRA knows that it's an RRSP. So that when you do get the return back as the investor, CRA is aware to treat it like an RRSP. Same thing as a TFSA. You know, the TFSA is set up and with Olympia Trust, and you would transfer the funds, whether it's from your own personal bank account and or a TFSA account. Same thing, the funds would transfer from that account, from your account to your Olympia Trust account.
Okay. How liquid are these investments? Can investors exit before the completion of the project?
So the investments are liquid to some degree, but the investors per se, it's a lock-in period for the term of the investment. In this case, we're talking the 2 to 3 year time frame.
Okay.
So the investors that are investing into the PRG Commercial Center project, their money is technically locked in until we complete the project and we distribute the profits back to the investors.
Okay.
If there was a liquidity crisis for the investor, if an investor came to us and said, hey, you know, I need some money, or, you know, we need to get our money back due to some emergency or something like that, I mean, we would work with that investor to see if we can help them with that.
Okay.
But typically, you have to look at it as though your money is locked in until the project is complete. Yes.
And in this case, it is around like 2 years and few months.
Right. So if we're looking at it now, so the investors who invested back in February, January, whatever to now, they're locked in potentially for the 3-year period, let's say, right?
Okay.
If you were investing today, we're already 8 months into the project. There's really only around 2 years and a few months left
Okay.
before the project's complete.
Okay. Apart from the Brampton Plaza, what other projects are you guys doing right now?
We will be bringing on very soon our Niagara project, which is basically a mixed-use commercial development in Niagara Falls. But we have industrial commercial near the 413 that eventually come to market. And we have a whole host of other projects that we're not talking about or we have access to, but we're not going to bring them out yet. So I would say currently we have at minimum 7 to 8 projects that are ready to go through a period of time.
Okay.
And then once we are ready to bring them to market, we will put them on as a project under our trust.
Okay. What track record does PRG have in delivering the past projects?
So I would say that PRG has a lot of track record in delivering projects with success. I'm going to focus on the most recent one, which is the phase 1 of the PRG Commercial Center project, which is Castlemore Town Center. Okay. That project was completed in 2023. And basically the whole entire project was fully sold to purchasers who are the owners that are running businesses in that plaza today. And the investors that were involved in that initial project received handsome returns on their investment. And it was a very successful project. I believe, well over almost, I'd say, 30% return to those initial investors on their initial investment. But that was a very successful project, 75,000 square feet, delivered on time, and completely sold out.
That's a great achievement.
I would say yes.
How do you see commercial real estate performing in the next 3 to 5 years?
So I would say that the commercial real estate is going to perform well based on the demands that we see out there in the market today. So, if we're talking Brampton, let's localize this a little bit. Because everything we do is strategic based on location, based on the timing of what's going on in the market. But if we talk about Brampton being a growing hub, growing corridor, growing city, there isn't a lot of these commercial developments of the nature of what we're building. So what I mean by that is that, when you look around the developments that are around Brampton, they're probably not as aesthetically appealing like ours. They probably don't have the site depth that we have, whereby we are not just putting one phase development on there, we're putting multiple phase developments on there. Okay. And commercial, I can tell you that just by the fact of all the inquiries we get today on that plaza from individuals and investors who want to purchase units for their businesses, the demand is very high.
Mr. Shadi, thank you for being here today. Give us a detailed information regarding, indirectly we can say, how someone can invest through registered funds like TFSA RRSP in real estate.
So thank you for having me here first off. Okay, appreciate you having the conversation with me. I think that real estate should be part of every individual or family in Canada, period. I think real estate is a very big component of wealth building. And this is what we're about, is we're taking our projects and showing people how they can build wealth through those developments and through those projects. Now, what makes it even better is that it is a mutual fund trust, which allows us to diversify the ability of an individual's investment into our projects beyond just cash. So when we talk about, individuals' ability to use money to invest into these types of projects, typically they're constrained by cash, right? Well, this is what the mutual fund trust does. It allows investors to bring in registered funds to do so. So when we talk about financial planning around, what you should be doing as an individual to grow your wealth, this is another opportunity outside of maybe what you're doing today, from real estate investing to stocks to etc. And I think that we are going to have a profound effect on a lot of investors that are going to come together with us to build these projects, because we have some great projects that are going to come about over the next 10, 15 years.
We look forward to meet you again soon.
Absolutely.
Thank you. Thanks very much.
Thank you so much.